Hi, this is Steve just with a quick update with the Fed announcement on interest rates. So let's look at the 10-year note index. This is the CBOE 10-year Treasury note index. It's actually based on 10 times the yield to maturity on the most recently auctioned 10-year notes. And the thing to keep in mind with this is that as the price goes up of this, it's actually increasing in 10-year yields. See, normally like with T-bond futures, with higher prices, because the T-bond futures are based on price, that means higher prices mean lower yields, lower prices mean higher yields. But here, these are actually yields. So what happened today, the market broke above a resistance area. Yields have increased on the 10-year note. And the reason I want to bring this to your attention, as I mentioned before, is because of the Fed announcement, and this is a result. So notice the support area, nice support area that held over here. The next resistance I see, and first, well, let me backstep here. First of all, notice the tall white candles. So these show strong bullish force for increasing yields short term. Minor resistance over here, the little spike here. But I think the next major resistance here, we have an evening star to refresh your memory with an evening star. It's a tall white candle, a small real body that ideally doesn't touch the first real body, and then a black candle that gets more than halfway into the first white real body. And so you can see how we had the evening star at the top end of the Bollinger Band. That tells us the market was overbought. And the long-term trend in the 10-year note futures is down. This is a 20-day moving average. This is a 50-day moving average. And when I see the 20 under the 50-day, these are simple moving averages. The trend is down. But notice that the 20-day moving average, the slope has turned up a little bit. So this lessens the downtrend of the longer-term trend. But of more concern from a short-term basis is the fact the market did break above resistance area. What could happen now is this old resistance from around here, 2142, to maybe 21. This old resistance should be a support area on any retracements. But the reason I wanted to send you this alert to keep you an update on, the technical action based on the Fed news. And we did have a breakout in the 10-year note index.